Hey there traders, and welcome back for episode number 111 from the StockBandit.tv. It is a place you can always find trading videos to make you better. And on Sundays here, you're always going to find a video here with a look at the major averages and some key levels for the week ahead. So that's what I'm here with you today for. And we're going to take a look at the NASDAQ and the S&P and the Dow, which all of them are still range bound. We are still in this multi-week trading range with just these high channel patterns here after the rebound from early November. So obviously we've rallied sharply, we've been basing, we just can't get out of this range. We can't punch through resistance on a closing basis, although we've tried some intraday, and we can't break down through support on a closing basis, although we've tried some intraday. So generally, this is just kind of a standoff taking place between the buyers and sellers. Obviously the bulls, the buyers have maintained the progress that they've made throughout the year, for that matter, all the way from this March low. Clearly the market's come a very, very long way without a major correction. However, they're stepping in to buy every little dip. At the same time, they're not really mustering up enough momentum to really punch through resistance and build on top of this high level base that could certainly support higher prices if we do see a close above upper resistance. So that's what's taking place here. We are just kind of in a holding pattern here, for lack of a better phrase. And I think that really for us as traders means that we need to shorten our time frames. We need to keep those stops tight and be looking for trades in both directions. And so earlier I just recorded the member video for the StockBandit.com, and anytime you're in a trading range like this, there are going to be opportunities on both the long and the short side. So you've got to be on the lookout for those, and there certainly are plenty of those heading into this week. So let's take a look at some key levels here. Upper resistance for the NASDAQ, 2205. We need to see a close beyond that level for this index to get back on the move. Lower support is down here at the 2140 area, so we need to see a breakdown through that on a closing basis, meaning price needs to finish a day under that level in order for us to maybe gather some downside momentum. But for now, we have yet to clear either one of those levels, and so we're just kind of playing the waiting game here, waiting to see if this base, after a big long run, if this channel right here is simply a pause before another push higher, or if instead maybe the buyers have kind of started to show some fatigue and possibly we're going to roll back over. So either one of those is possible, and we've got to be open to any scenario which may unfold. For the S&P 500, we've got a very clean channel here. Lower support at the 1084 level. We've been really respecting that on a number of occasions. We have upper resistance up here at 1113. So we need to close above 1113 to get back on the move to the upside. We need to break down through 1084 to get moving on the downside. But here's typical price action. Last week we kind of tested the lower end of this, and from Wednesday through Friday we rallied from there. However, take a look at this pretty weak volume that accompanied that 3-day bounce. So it's tough to have a lot of conviction in either direction at this point. Basically, we're just back and forth between these two key levels, and until one side really takes the ball and runs with it, we can expect more of the same. For the Dow, now this is the least important index of the three of them to me, given that it's only 30 stocks. However, it is the oldest of the bunch, and it's also the one that Main Street pays the most attention to. So when Joe Investor goes home and turns on the news, he's going to see a report of what the Dow did today as opposed to necessarily what the NASDAQ or S&P does. So this is also an influence on the decision making of the general investing public, and so I definitely want to keep an eye on it as well, even though I don't make a lot of my decisions based on the Dow. Upper resistance, very well defined up here at the 10,500 area. We've poked through it a few times lately, have yet to close above it. We need to see that take place. However, again, last week we rallied off this very short-term support where this yellow horizontal line is. That's the 10,230 area. We bounced on Wednesday, Thursday, and Friday. But take a look at this very quiet volume that came along with that bounce. Nothing substantial there, nothing meaningful yet. So, we could poke back through that 10,500 area. What we really need to see is a close beyond it before we can expect that this index is as well going to get back on the move. So thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.